Grains closing higher on Thursday. Darin Newsom is back with analysis. And Darin, nice to see the grains all close back to the plus side after some weakness during the session on Thursday. But it looks like when we get these pullbacks, end users come in to buy, right?
It's certainly what it looks like, Michelle. I mean, we drop these markets down. We see the funds moving to the sideline, getting out of positions, and so pushing the markets down in some cases. And so what that does is it opens the door. You know, if the commercial side's able to step in, get their short-term needs covered, and this provides a little bit of a spark to the rally. We could certainly see that in corn around the round numbers. Once December dips its toes back below $4, it immediately uncovers some of that buying, and off we go. And probably work our way back up to near 420 or so before the selling starts to come back in. Soybeans is a little more sporadic. We know we've got plenty of soybeans on hand. We're not going to run out of soybeans anytime soon. The U.S. made itself a secondary player on the global stage with the trade war. But that being the case, the world's largest buyer is still looking for some secondary beans. And so when you get a 15, 20 cent sell-off, they step back in, and again, it allows the market to rally.
So if end users feel like this is a value level, do you anticipate we're going to see even more demand come at this market?
Probably not a lot. But I think we're going to get some of those secondary needs covered. And corn is just going to be short term because there's really no rush to get long-term corn. Again, it's not like we're going to run out of corn. We've got a good harvest going on. Basis certainly isn't showing things are heating up to any certain degree. I mean, we've still got the national average basis market still running near its previous 5-year lows. So, I mean, it's not like we're running tight on corn. It's not like harvest is being threatened or anything like this with weather. So it's just going to be one of those things that when end users step in, they're going to cover it for a little bit. They're going to, buy some short-term, maybe some intermediate-term corn, and they're going to step back out of the market. In the soybeans, you get a sell-off. Again, the world's largest buyer, maybe some of its friends are going to step in, get some buying done, and then move back to the sidelines.
How unusual is it to have, we had that big rally coming into the first part of harvest. Now we continue to see some of this end user buying. How unusual is that? Or is that the seasonal pattern that we normally get?
That is the changed seasonal pattern. 5-10 years ago, it would have been unusual to see, harvest rallies. Now it's become more commonplace with, let's look at the corn market. It tends to put its low weekly close in, say, early to mid-September, and then rally from there. And then, of course, we've got the U.S. government insurance price calculated during October. That's always a fun discussion, fun debate. But, so you have that going on as well. So, now we can look at this sell-off that we've seen here through the middle part of October, and we can actually, raise the question, is that the contra-seasonal move? Is a sell-off during harvest now considered contra-seasonal? And I think that's just an interesting change over the last few decades.
Yeah. The other interesting part is obviously some of this commercial buying is offsetting some of the funds selling, or if the funds just stepped away here.
The funds, what was interesting about that is watching the CFTC reports, particularly the commitment to traders legacy futures only, was that, a week ago, as of Tuesday, October 8th, they'd moved to a net long position in corn and hard red winter wheat. So they'd actually overshot the sidelines in corn market by a good deal. And so that led to the selling that we saw from Tuesday to Tuesday as some of those positions were liquidated. And again, I think it just goes back to the fact that the funds are wanting to move to the sidelines. Now, what this does is it eventually opens up the field just to the commercial side. So we're going to get, I think activity is going to get quite a bit choppier. Again, going back to the idea of funds, or the commercial side will buy when they need, step out when they don't. And that's going to lead to a lot of, quick spikes and sell-offs and these sorts of things. So I think it's going to be fun to watch, particularly if funds do find a good home on the sidelines in the grain sector and move the money elsewhere.
I have a follow-up question in terms of, you said this is a value buy by the end users. Is there anything politically motivated here, or are there concerns either by China or Mexico that if Trump gets in as president, that we are going to see tariffs? So they're going to buy ahead of that?
Well, I think so. I mean, they've been doing this business for a long time. China, has been doing it for centuries more than the United States. Mexico is a big buyer of U.S. goods. So, I mean, if you've got somebody out there promising more trade wars, trade fights, tariffs, this, that, everything else on everything possible, looking to, again, destroy U.S. agriculture, which is what was attempted the first time around. Yes, those buyers are going to try to get some coverage on. And then they'd be smart too. So, while this week's purchases by Mexico wasn't anything out of the ordinary, if we continue to see it, then I think that just again shows how much concern they have that this whole thing is going to get blown apart.
Yeah. Okay, so the wheat market, a bounce there as well. Is that all short covering again? I don't even know if the funds have any ammo left to cover in terms of short positions there anymore, but
Yeah, really just in Chicago and Minneapolis, and often we don't look that hard at Minneapolis. It's a lower volume. It's kind of a niche trade, but it is an important market when we're talking about spring wheat, is particularly from the commercial side. But as far as the winter wheat markets go, it's really hard to pinpoint because there's no real fundamental reason for funds to get excited in here. Yet, we do see these rounds of buying coming in. Now, again, they were still holding a sizable net short futures position in the Chicago market. They actually increased it as of a week ago Tuesday. So it'll be interesting to see if they have covered some of that. So right now, I'm going to still chalk it up to non-commercial or fund activity. Again, given the fact that supply and demand just isn't that dramatic, doesn't really need to be covered all that much by the funds. But it could change. We'll see if it changes. As we look ahead, probably not till next spring, when traders start to take into account more of what we're seeing in the weather, with the drought stretching from far northern North Dakota down to far southern Texas, across the entirety of the plains.
yeah, and even if you believe we're trading weather, the Southern Plains is looking like they're going to get some rain, and I think parts of the Black Sea have gotten some, so that probably speaks to your point there. Okay, you mentioned money flow. Let's talk about this. Outside markets, softs. Talk about what's going on with money flow in the market right now.
The softs are an attractive investment opportunity to me. It looks like so this money that's being made in the U.S. stock markets, some of it's going to roll out and it's going to look for other areas. And over in the softs sector, we see all of these markets with varying degrees of inverted forward curves, telling us supply and demand is bullish. Now we can look at that either short term, intermediate term, long term, and most of this is due to weather. Again, these markets are weather derivatives, so it's going to draw some attention from long-term investment traders. And so I still think softs are the way to go. I still think softs is where they're going to be looking. Some could be paying attention to the energies as well. We also see an inverted forward curve in crude oil. That's been a wild ride of late. I mean, and here again, if we look at crude oil as a possible, I can't have a hard time saying crude oil is a safe haven market, but as a hedge against some of the possible chaos still coming before the next U.S. U.S. presidential election, then you may see some investment money moving over into crude oil, similar to what we've seen so far in gold.
Do you think the stock market at some point is going to stop seeing all of the investor money come towards it? Is it due for a correction at some point here?
I think, yeah, I mean, it could sell off at any time. It has gone almost straight up now for quite some time. It's been in a major uptrend since what I think October 2022, something like that. So at least for 2 years now. So it could take a breather at some point. But there still seems to be plenty of fuel to push this thing higher. Number one, investors, not just in the U.S. but globally, see the economic situation as again across the globe as better than it was a few years ago, and so they don't have a lot of fear in the stock markets in particular. I mean, in general, the fear comes in from what could happen still from those players trying to influence the U.S. presidential election. This is where the fear comes in. This is where the buying in gold comes in. This is where possible buying in crude oil comes in. But as far as the U.S. stock markets, European stock markets, and so on, yeah, there's still a lot of buying interest in these. Could they come down? Yes, because nothing goes up forever. But we do have to remember my rule number 7 is stock markets go up over time. So even if they sell off, I think you're going to see good investors looking for buying opportunities rather than just bailing out.
Cattle market ended mixed today. We actually had bear spreading in live cattle, despite the fact that cash trade is being, I guess, quoted at 187 to 188 in the South, so steady to even a buck better. So is that market getting tired?
Certainly looks that way. Now, it'll be interesting to see how this week plays out, how we finish it off. If we start to see some buying coming back into the futures market, on Friday, heading into the weekend. We've seen a very strong, or we've seen, the box beef market's been on fire this week. We've seen both choice and select. So it's not just like the lower price cuts are moving. Everything's moving right now. So this could push the packers to paying a little bit more. As you mentioned, we saw about $1 better in the South on Thursday. So maybe the futures just need a little bit of time to digest this, see if it follows through into Friday. And if so, maybe it starts to bring some money back in, to close out the week.
All right. Thanks for joining us. That is Darin Newsom, Senior Market Analyst with Barchart and Markets Now.